Since 2023, we've made the clearest money from artificial intelligence. Those who invested in stocks related to artificial intelligence multiplied their fortunes. What happened in May 2023? Nvidia's impressive financial report, the first earnings report where we saw the impact of artificial intelligence, and at the same time, OpenAI being used more and more. But of course, a lot has happened since then. Artificial intelligence is also advancing rapidly. So where's the money going now? Where are the investment opportunities emerging? Which companies are going to get rich faster? Which companies' investors have a brighter future? There are a lot of rumors going around these days, as you know. Artificial intelligence has become a bubble. There's no need for this many AI data centers, investments have become excessive, and so on. What's the real situation over there? Nvidia just isn't taking off. Two companies started this revolution, OpenAI and Nvidia. We're going to break down what all of this means for you. If you're ready, we're about to dive into a new deep tech exploration together.
It's evolving. Look at the gears shift.
The title of the presentation I've prepared for you today is Where's the Money in Artificial Intelligence? Today, I made use of an important source. I subscribe to many paid sources, especially for semiconductor research. These are essential since we aren't in the field ourselves.
Ready?
There are people who gather information from the field. One of them is semi-analysis. Semi already means semiconductor. It's a really great report. AI value capture. Where is value being captured in artificial intelligence? The shift toward model laboratories. That's the title.
Look at that list.
Maybe you'll want to buy it too.
So fast.
Now first, we also need to take a look at history. In 2023, the money flowed to Nvidia. So Nvidia was the biggest winner of that period. I'll never forget that earnings report in May. Since I was a bit nervous before the report, I had slightly reduced my position. I wish I hadn't reduced it, but after that, there was a very long rally. In 2023 alone, it went up by 280%. From that day to today, the increase has reached 1,000%. In 2024, energy companies came to the forefront. Again, we were on the right side here. For example, we were in Vistra, a 265% increase in just 1 year, because it became clear that AI GPUs would have a huge need for energy. This year, money flowed into this. In 2025, the focus shifted to memory chips. We talked about Micron's earnings, saying it was an amazing report. Unfortunately, I joined this rally late. I woke up to it a bit late. I thought most of these companies were cyclical companies. At the beginning of 2025, I got into Micron and still made quite a good profit. But I admit I was a bit late. So who will be the winners in 2026 and beyond? That's the real question. And it looks like the winners of this era will be AI labs. So who are they? Anthropic, OpenAI, maybe Gemini, maybe some Chinese players, maybe Grok. Because lately there have been incredible increases in performance on this side. For example, when we look at Anthropic, ARR, that is annual recurring revenue, jumped from $9 million to $44 million in just 3 months. I'm probably one of the victims of this myself. Right now, my monthly spending on Anthropic exceeds $1,500 to $2,000. Why has there been such an increase? Behind this is the technology developed by Anthropic, or rather, they were the first to bring it to market, and they launched it with a really great user experience. AI agents, artificial intelligence agents, or just AI agents, they changed the whole game. Similar revenue growth, although not as strong, is also happening at OpenAI. By the way, we're also seeing a significant increase in users at Google with Gemini. And of course, there are also Chinese players, like DeepSeek, for example. Although their financials and revenues aren't very transparent, we can see that they're also experiencing strong growth. And this growth is also happening with good profitability. When we look at Anthropic, while revenue increased from $9 million to $44 million, the gross profit margin also rose from 38% to 70%. That's an incredible increase. Not net profit though. These companies may not be making a net profit yet, but there's a significant climb in gross profit. So what does this mean? It shows that the company has serious pricing power and is able to pass on prices to its customers as it wishes, which is why its profit margin has doubled. As I said, the main reason for this is agentic artificial intelligence, or agency-based AI. What's the difference? I mean, I know most of you are still using artificial intelligence at the level of asking a question and getting an answer. We call this a chatbot. With chatbots, you ask a question, it answers, and then it stops. It doesn't do anything else. But agency-based AIs actually get things done. For example, it converts an Excel file into a chart, reads the file, analyzes the data, designs the charts, writes the code, and saves it. Next time, to get the chart in the same way, it creates the database. It does all of this. I've also been using it a lot lately. I'm using it like crazy, and I can really see its impact. At this point, there's actual production, actual work being done. Where are agent-based AIs used the most? They're used heavily in coding, of course, turning Excel models into dashboards, financial analysis. That's why my financial analysis skills have improved a lot too. Scanning company news, scanning news about any sector, summarizing balance sheet reports, conducting competitive research. In other words, they're being used in every field. And these uses require much more AI power. They need a lot more GPU, CPU, and memory. Semi-Analysis has given some examples from their own companies. Basically, why agentic AIs are so popular, why companies are investing heavily in them, and why they're going to invest even more. For example, in the past, it used to take a person 8 hours to create a financial model. The cost of those 8 hours is roughly $500. Now, with AI, they can do it in 12 minutes and the token costs are around $2. That's a 99% savings. Previously, it took someone about 4 hours to create a dashboard from an Excel spreadsheet, costing $250. Now it gets done in 5 minutes. It only costs about 50 cents. That's a 99% savings. To summarize news about a company, they used to have an intern work for about 2 hours at a cost of $120. Now it gets done in 2 minutes for just 30 cents. That's a 99% savings. Or take a competitor analysis report. What used to be a full day's work for a more senior employee, costing around $800, now gets done in 30 minutes using $5 worth of tokens. Again, that's a 99% savings. And I see this in my own work as well. I set up this whole system all by myself. This system tracks portfolios. It identifies risks and spots problems in the macroeconomy. Now, our users, our school-level users, have started entering their own portfolios here. They can measure their own risks, and I built all of this myself. So the amount I spend monthly on the cloud is about $1,500 to $2,000. You might say, Professor, isn't that a small amount? I mean, considering what it can do, I think it's not much. It's also possible to make it more economical. Since my relationship with technology is limited, I'm probably using the least efficient and most expensive methods. Even so, I'm incredibly satisfied with the results I've achieved. For example, this is another data set from our dashboard. Here, we're measuring what's happening in the world of artificial intelligence. How are rental prices for different GPUs trending? How are token prices changing? We're tracking all of this, and look, there's an interesting figure here. Token compute spread. What does this mean? Token prices are getting cheaper. Meanwhile, the prices of the GPUs we use to generate these tokens are going up. This was an issue that made the markets a bit nervous. Oh no, are tokens starting to get cheaper? So does that mean there's no demand? Are these things about to crash? There was a lot of nonsense talk like this going around. But what's really happening? Let's dive a bit deeper into the details now. What's happening is the incredible performance difference of the new chips. Look, the GB300s compared to the H100s, these are Nvidia's chips. When we look at FP8 format, they deliver 17 times better performance. The GB300s deliver 32 times better performance compared to the H100 FP4s. On the other hand, the cost difference of these AI infrastructures compared to the old ones is only about 70% higher. You might say there's a massive 70% price increase, but just look at the difference in efficiency it brings. So what does this mean? They can produce more tokens at a lower cost. Because of this, token costs are going down. The issue isn't just about what's happening with GPUs and CPUs, there are also certain optimizations in the software. Innovations can be made there as well. For example, with a fully optimized good piece of software on the same V3 hardware, it's possible to generate 14,000 tokens per second, but if you haven't optimized, this drops to just 1,000 tokens per second. This is where we see the importance of software. Nvidia's way ahead here, especially with its CUDA software. They managed to achieve these kinds of optimizations. So when we look at hardware plus software together, there's about a 30-fold increase in productivity. More tokens can be generated. On the other hand, the cost increase in AI infrastructures is only around 70%. This is the secret of the matter. It seems like tokens are getting cheaper. Yes, they are getting cheaper. Why? Because now there are much more productive, much more efficient GPUs behind them. I want to give you an example. For instance, if we look at Cloud's Opus 4.5, these are somewhat old numbers. Numbers from November 2025. For 1 million token inputs, the cost is $5, and for 1 million token outputs, the cost is $25 in Opus 4.5. In the previous Opus, these costs were $15 and $75 respectively. And interestingly, the company's profit margin is also increasing during this time, so the cost of tokens is going down. That means they're offering services to customers at a lower price. Because what service am I basically getting from Anthropic? I'm having it write code, I'm consuming tokens. So my consumption there is tokens. I can consume them more cheaply now. But the company's profit margin has gone up from 38% to 70%. Why? Because I'm consuming way more tokens. It's that simple. That's why the overall profit margin's going up. The company is getting more and more efficiency out of its GPUs, out of the rent it pays for GPUs. So they're not running into
Election day is
losses or
almost
anything like
here.
that. The revenues and profits
Time
are
to
increasing.
vote.
This week, OpenAI said it would delay its IPO because they're not really happy with the markets. And they're right. You know, lately tech companies have been a bit shaken up. And now we're heading into election season and all that. I think they just didn't want to take that kind of risk. And you know, when SpaceX went public, it sucked a lot of liquidity out of the market. Anthropic, which owns Claude, is going public this year. That's also going to suck up quite a bit of liquidity. I think OpenAI is doing something smart. It's delayed until 2027 to let the noise settle. And I think by then
Time to
they'll have
polish
their
this
balance sheet in better shape too.
Look at its
But all
sparkle,
this talk
perfectly
about these
smooth.
companies
Brilliantly
collapsing,
done.
losing money,
Whoa, a
tokens
dragon.
getting cheaper and
What's
so on,
this?
it's
Fake
all
rumors.
nonsense.
Out
You can
they
see
go.
here, even though token prices are dropping, these companies' gross profits are increasing. So can they maintain this? Now, there are a lot of
Open source
rumors going
blueprints
around
unroll
about this
themselves.
too. There's
Magically
competition
smooth.
coming from China, for example. And then there are these open models like, I don't know, models like Kimi K 2.6. Could they eat into the profit margins of advanced language models like Claude? I mean, no, guys, that's just not possible. Because even though the benchmarks for these kinds of open models don't look bad at first, once you actually use them, it becomes clear that their performance isn't sufficient for advanced or heavy use. Yes, in some areas, they can substitute for the big models. But if you really have advanced
Whoa,
use
what's
cases,
happening?
they're definitely
Hey, stop
not on the
pushing
same
me!
level.
Out
And
of the way!
honestly, they just can't be. Because they don't have those incredible Nvidia GPUs behind them. You know, the US is imposing really serious embargoes on China in this area. On the other hand, there's already a general shortage of hardware overall. Today, if you look at Anthropic, they're turning down a lot of customers. They're driving prices way up and lowering usage quotas. How can they do this? Because there's so much demand at their own infrastructure, their GPUs just aren't enough. That's why they can easily ask customers for higher prices. Will this keep going like this? Yeah, it'll keep going. Right now, supply just can't keep up with demand. This will keep going because we're using it more and more. I can see this from my own usage. The more you do, the more you become able to do. And I'm
Ready
just
for
an
the magic?
individual
Yes,
user after all.
open them.
Habits
The
around this are
stories
also
come alive.
developing in large organizations. Sometimes the settings get out of hand, there's excessive usage, then people start saving and so on. Because at first, companies implemented a strange policy called token maximization to get
Let's
their
turn this
employees
dial.
used to AI. They told
There we go.
everyone to use
It's
a lot of
stabilizing.
tokens, and people did. Honestly, I think most of it was wasted. Because of that, companies' token costs shot up.
Let's see
But
what
now
this
things
can
are
do.
balancing out. For example,
Whoa, sparks
personally, I'm
everywhere.
finding more efficient ways to use my tokens as time goes on. But one thing hasn't changed. We still need to use a lot of tokens. Because those who can do the right things with AI agents are leaving those who can't in the dust. Like this in every field. Honestly, it's the same in my field too. The knowledge, data, and analytical skills that members of our club have access to right now are on a whole different level. That's exactly why we have thousands of members. And that's despite being one of the most expensive
Whoa,
memberships on the
power
market.
surge.
I'm not
Let's
saying
ride
this
the
to
energy
brag.
wave.
I'm telling you something very clear. Those who use AI agents well will outpace those who don't. It's like this in every industry.
It
So
balances
it's impossible
perfectly.
for usage not to
And now they
increase.
glow.
So who's happy with this value chain? Honestly, I'm happy. The users are happy. We're able to do more and more things for the same unit cost. The AI labs are very happy too. They're making serious money, especially Anthropic. The memory manufacturers are super happy. The neo clouds, the data centers, they're having a good time right now because GPU rental prices keep going up. As those prices rise, these companies' profits increase too. But things aren't quite as rosy for Nvidia and TSMC. Actually, their revenues and profits are fantastic, but their stock prices aren't doing so well. That's because both of these
Empty
companies
wallet.
are deliberately
Shakes and
trying to
dust
keep their
falls out.
prices low. Since they're keeping prices low, their
Let's speed
profit
this
margins
up.
aren't exploding to, say,
Whoa, look at that
85%
trail.
like Micron's. They're keeping them at more reasonable levels. There's a reason for this, a strategy behind it. If Nvidia wanted
What's
to,
this
it could raise
coin?
prices right now.
Let's
There's
find
no
the
one who
truth.
could stop them because there still isn't any serious competition. I mean, AMD has GPUs, but they're much fewer in number. They don't have the software support behind them, and their capacities are insufficient. Intel has been trying to produce GPUs for a long time, but there's still nothing significant. On the other hand, there are TPUs. So there are chips designed for a single purpose, like Google's chips, like Amazon's chips,
Time to
but they
drag
don't work
these
for
heavy
everything
bags.
either. They only do a
So
specific
heavy.
job very
Almost
efficiently
there.
in a narrow field. That's why Nvidia is basically still unrivaled, but they're not raising prices any further because they're a bit afraid of regulatory risk. In other words, they're worried about being treated like a monopoly, about regulators coming after them. They want to keep the ecosystem alive, because if you raise prices too much, you kill the ecosystem. Look, this is exactly what's happening right now between Micron and Apple. Since Micron has gained significant monopoly power, especially in HBM, they kept raising prices. Apple finally rebelled. As of last week, Apple not only raised the prices of its own devices, but also started looking for alternative memory suppliers. Rumor has it that they're trying to get permission from the US government to buy memory from a Chinese manufacturer. That project probably won't work out, but they're still trying, because after a certain point, you just get fed up. I mean, when you exaggerate your profit margin too much, you end up making a lot of enemies, and those enemies will eventually try to find a solution. That solution could be finding an alternative supplier, or calling on the government to step in. They might even say, look, there's a trust issue here. Or by developing new software or technologies, they might try to reduce dependence on that product, in this example, memory. That's why it's important not to overdo it and to keep things balanced. But of course, companies like Micron also want to increase their profits when they get the chance. Because for many years, Micron was a struggling company that didn't really make much profit. Now it's their time to shine. With this strategy, Nvidia is also making things harder for its competitors. Very high profit margins actually make life easier for competitors. With just a small discount, they could quickly grab a share of the market. But Nvidia prices products to make it harder for competitors to enter. Nvidia uses all three strategies. TSMC has a different structure and is a long-time industry veteran. They have a very experienced management team. They know that in the microchip market, sometimes there are serious surges in demand and then there are drops. During those demand surges, they don't want to raise prices too much so they can keep prices balanced. TSMC follows this kind of strategy so that there's always a steady flow and no sudden fluctuations. Otherwise, if they wanted, both companies could actually charge higher prices. But right now, they prefer to keep the ecosystem like this. And Vera Rubin, Nvidia's new chip. The Vera Rubins will ramp up even more in the second half of this year, most likely in the last quarter, and they're now starting to be offered to customers. They have much higher power consumption. The memory architecture is very different. We'll focus on this a bit. While in the GB300s, the memory was soldered onto the microchip, now they're switching to a system called SOCAM, where it can be attached and removed. This will have very significant effects. When we look at CapEx, meaning the expenditure per watt, the new system's a bit more expensive than the old one, but there isn't a huge price difference. When you look at the minimum rental prices, for the GB300s, it was $1.50 to $2 per hour, while for the Vera Rubins, it's $4.92 per hour. But that's just a minimum. Minimum means that the data center can take this chip and rent it out with about a 15% profit margin on top. So from this perspective, renting these is more expensive. We don't know about the token speed side of things. It's said that it'll be much faster, but we don't have any concrete data on this yet. At least that's what SemiAnalysis says, but it's clear that it will be much faster. This actually shows what kind of opportunity set lies ahead for Nvidia, so this price could go much higher. Both Nvidia and the NeoCloud folks could make serious money from this. What's important here is how different this token speed will be, because nobody wants to deal with something that has a lower token speed. Customers will gravitate toward the fastest option. At least for critical tasks, analysts say that right now, the base price for Vera Rubins will be $4.92, but this could go up to $12.25. As I said, at $4.95 for a 5-year contract, a NeoCloud or a data center would want at least this price for a 15.6% project return. But there's room for it to go even higher. There's about a 2.5 times margin there. And this is an opportunity for Nvidia to increase its revenue. It's also an opportunity for NeoClouds to boost their revenue if there's enough demand. I'm sure the demand will come. And Nvidia is also making a change in memory. As I mentioned earlier, on the GB300s, the memory was soldered onto the motherboard. With these new ones, they're bringing it as a removable module. They're actually doing something really clever. This way, they can achieve two things at once. First, they can set a new product pricing, and since there's a huge shortage in the memory market, they can raise the price. By the way, they're still buying these memory modules from South Korean suppliers. You might have already followed this. Jensen went to South Korea. He secured massive orders there, paid up front, and used his influence. Because of this, the company currently has no issues with memory. They can also sell and price these memories called SOCAM separately. There are some predictions about this. They say the price could go up to $13 per gigabyte. So it actually looks like another great opportunity for Nvidia. And don't forget, there's a memory shortage too. In other words, memory prices have increased about sixfold over the past year. TSMC's memory production line is currently operating at 100% of its N3 capacity. The occupancy rate in DRAM factories is above 90%, so there's a serious shortage here as well. Nvidia has already solved this issue. They went ahead and placed a huge memory order. They also set up a structure that allows them to price it separately. That's why I think Nvidia actually has bright days ahead. So what opportunities and risks are next? In other words, Nvidia could gain an entirely new profit margin through this SOCM memory. Previously, it used to come soldered onto the chip, so they couldn't price it separately or make money from it. I predict that TSMC will ask for upfront payment for its capacity since it won't be able to increase its capacity at the same pace in the coming period. They could achieve a significant increase in revenue. AI labs could further boost their profit margins with more premium products like Mythos, Opus Fast, or GPT 5.6. Because especially in advanced processes, companies and individuals really need this. And in neoclouds, due to high demand, rental prices may increase and their revenues could also rise. So I now see this area as promising. There is strength here. Is there still strength on the memory side? I think when Nvidia steps in, it will somewhat weaken the strength on the memory side, but they've already sold out until the end of 2027 anyway. So that side also looks quite tough. Are there any risks? Of course there are. Could open source models, if Chinese models accelerate rapidly, create some competition? I don't really think so. Because people are jumping in with a lot of enthusiasm, but then it turns out that they don't deliver the same performance. TPUs and Amazon's Trainium chips, can these scale up a lot? Can they take market share from Nvidia? It's certain they'll take some share, but these are chips focused on a single area. Eventually, they hit a wall somewhere. If DRAM prices push up the cost base, but price increases are delayed, margins could shrink. That's true, but Nvidia has largely protected itself from this. And then, could there be antitrust investigations? Will they go after Nvidia? These are also risks. To sum up, here's how I see the situation. In AI, the side that's now making money, the most important side in the coming period will be the companies that develop and sell AI models. Among these, Anthropic comes first. Agentic AI is a real turning point. The value of the token has increased while its cost has dropped significantly. It's more useful now and its cost is going down. That's why companies are using it just as they said they would. Nvidia keeps its prices balanced this way. It's acting like a central bank. They want the market ecosystem to stay balanced. But now, I think they're about to do something new on the memory side that will boost profits. It looks like they could increase their profits a bit more with the Vera Rubins if these are as fast as predicted. The issue of memory shortage is a serious matter. SOCM, which is Nvidia's unsoldered chip, seems like it will create an opportunity for them here. And the price advantages in Vera Rubin also seem to work in Nvidia's favor. To sum up, I still think Nvidia is a good opportunity. The stock turned out really well and its price hasn't really gone anywhere this year. That's why I'll keep gradually buying Nvidia in the coming period. By the way, why isn't Nvidia's price going up? The reason for this is actually very simple. This is a $5 trillion company. Sometimes big funds need liquidity. Nvidia is a stock that's easy to sell. Why? It has plenty of liquidity, so you aren't selling at a huge loss. Why do they need it? For example, they've invested in areas like SpaceX. They're trying to get into new fields. They're trying to allocate more money to new areas like photonics and artificial intelligence. But I think after the second half of this year with Vera Rubin, SOCM, and all these together, Nvidia is becoming a strong player. And Anthropic is a very strong player. It's hard to invest directly in Anthropic, but here's something to consider about it. In our portfolio management system, we have a thematic section like this. We're trying to measure the performance of different technological themes. Here, look, we have a theme called Anthropic IPO exposure. There are 8 stocks here. These are companies whose value will increase due to a successful IPO by Anthropic, and you can invest in them. You can also find Anthropic in some interesting ETFs. So that's a bit of an indirect method, but I still think this is a very strong area. So what I'm saying is, for the rest of the year, of course photonics will continue, and of course are still opportunities on the memory side, but I think things will slowly start happening there to squeeze the profit margins a bit. I think Nvidia will be the real winner of the second half of the year. I also find its price extremely reasonable. It's dropped quite a bit. I also think that companies that will benefit from the Anthropic IPO exposure will present good investment opportunities. Of course, I could be wrong. What I've shared is not investment advice. I just wanted to share my own strategy with you. I hope you enjoyed it. A like or a comment would be awesome. Stay with love, stay with respect.